In this video, we'll be taking a look at a few chart analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. I know my commitment towards this YouTube channel has been a little shaky this past few weeks, and I just want to extend my apologies once more for not sending out this weekly analysis last week, right? But we're doing it today, and we'll be taking a look at gold, crude oil, AUD-USD, USD-JPY, and Bitcoin. So whichever chart you feel interested in, you could just use the timestamp below to navigate through what you're interested in, right? But I promise you, every chart we're going to talk about today are going to be interesting, and they're going to present you with good opportunities to take advantage of the market this week. So on the chart here, you can see this is a gold chart on the daily time frame, and as we've discussed earlier on, we've had a bullish breakout from this bullish flag, right? So we've discussed extensively over the past few weeks that there's a good chance gold breaks out from this bullish flag, aiming for higher highs, right? And we did that about 3 weeks ago. Yeah, so 3 weeks ago we had our bullish breakout, taking out the all-time highs, sending price all the way to the current price levels of 2,164. So what I see right now is a bit of a consolidation. I think we're going to head higher, but we may see some pullback before we head higher. As you can see on the RSI over here, you can see we tapped into the extremely overbought level, and now we seem to be reversing to the downside. And I think there's some sort of a bearish divergence over here, right? Price created higher highs, and our momentum indicator, which is the RSI, created lower highs after being overbought. So there's a good chance we would be heading lower for probably a retest of this broken level before we head higher. So I'm going to go down to the lower time frame. Let's see 4 hours time frame for us to clearly see what's happening down here. Okay, gonna get rid of this, and I'm gonna get rid of this. So right now we had our good consolidation. So if you've been following us for some time now, you know we've talked about gold extensively. So we had that breakout as expected. We had a good consolidation around the resistance level, and we had another bullish breakout. So this sent price upwards to probably around 1,000 pips. So if you were in this trade, that would have been a good price level to take profits, if you're not being greedy. So I know some traders are still holding their trades right now, but that's by the wayside. So I think there's a good chance we come all the way down to retest this price level, which would present us with another good opportunity to go long. So this is probably the best possible buy zone right now for gold, right? Except or otherwise we see other sort of price action this coming week that will give us better information on what to expect from the market. But if you're trading gold right now, I think you should keep an eye on this price level for a retest, because if we do get a retest, that would be a very solid deep value level for us to take those longs, aiming for higher price targets, right? Because the current bearish divergence, so once again taking the highs and taking the highs over here, so you can see we have a good bearish divergence on the 4 hours time frame, on the daily time frame, also on the 12 hours time frame. Almost all the time frame we've got this bearish direction, which means there's a good chance price goes lower. So we may see price movements like this, so a pump to the upside, move to the downside like this, slowly, then come down here before we go up. So when you see a pump like this, I do not want you to get FOMO'd into the market thinking we're going to go higher now, then jump to the trade, set your stop loss probably below these price levels. So if you have enough capital to take such risk, then yes, you can do that, but be mindful of your price levels, right, before you open your trades, because it's a good chance this may just be a shakeout before we head lower, aiming for this area of retest. So this is my first price target, right? The most valuable price targets to go long or good right now is around this resistance level where we had this massive breakout. So if this doesn't happen, something you could also watch out for is this. Trading is all about probability, so you want to get into trades with the highest probability, and what I just explained seems to be the most logical scenario, right, to go long. Alternatively, we could see price consolidating over these price levels, right, because this is turning out to be a good support. Then we'll go higher. So this could also be another good opportunity to go long. So the reason why this could be another opportunity to go long is because so many traders, let's say big investors or massive investors or big banks, they're expecting retail traders to wait for price to come over to this resistance. But usually they like to front run the traders. So while we're waiting for price to get here, they just place their bids over here and ride the price higher, because market would not always give you exactly what you want, right? So if you are open to taking some risk, right, risking a little portion of your trade balance, let's say 0.5% or 1% maximum, not even 1%, 0.5% is good, then you could go long when we get a good consolidation. So let's use that statement. If we get a good consolidation around the support level followed by a good bullish bounce, then you could go long on the bullish bounce, right? Stop loss will be below the support level, and your target could be as high as this high for first target. Then you trade the rest of your position as we go higher. So I'm going to go down to the 2 hours time frame. So let's see how solid this support level is. So you can see clearly this might be a good area to open those long positions if we do get a bullish bounce or bullish reversal. So similar to what we had over here. So just give me a minute. I'm going to adjust my chart. So similar to what we had over here. So you can see without this price action, without this bullish candle over here, you can see we had a good bounce and a consolidation bouncing off of this support level. Then we had a bullish breakout. So I think maybe on the 30 minutes time frame, you would have had an opportunity to go long. So something like this is what something similar to this is what we'll be watching out for over here, right? So if you're going to take a trade off of this support level, so we go into this price level, we bounce off, consolidate a little, bounce off, then eventually going higher, right? So this is how I'm going to trade gold if you are willing to take some risks, right? So if you go long over here, for example, so let's say you go long over here at the breakout or the solid bounce, stop loss will be below the support level, first target will be around this highest, then you trade the rest of the positions to go higher. So this is another bullish case scenario for gold for those who are willing to get into this trade. Then alternatively, if this doesn't work out to our favor, we see price taking out our stop loss, then next target will be waiting for price to retest these price levels, then we'll take a good trade. So I think this area of resistance is probably going to hold if this one doesn't hold, but I think there's a good chance this scenario plays out, right? So if you are doing this, going with very little risk, minimum risk, and watch the market, follow the market, and make sure you change your analysis as the market evolves, as the market changes, as you get new information. So don't be hell-bent on sticking to your particular thesis, even when you can clearly see that the market has changed, the market direction has turned, or you can see that we've got new information telling us or signifying that we are likely going to go lower. So it's not logical for you to remain bullish, hold your positions even when market is going to go lower, right? So that's what I mean by being flexible, right? Being flexible when it comes to carrying out your market analysis. So that's it briefly for gold. Moving on, we're talking about crude oil. So crude oil, real quick, this is one of the most important commodities right now. So many investors are watching this, and we've been following this for quite some time as well. So on the daily time frame, you can see we took out this area of resistance. So I'm going to go to the lower time frame so we can clearly see what happened over here. So moving on, before I go down, most likely we're going to see price movement like this. So maybe down, up, choppy price movement to the upside, then eventually hitting area of resistance. So if you're a trader who could, who can hold trade for long, then this could be a good trade opportunity for you to take advantage of, right? So going down to the lower time frame, so I'm going to go down to the 4 hours time frame, for example. You can see, excuse me, I'm going to get rid of this, and sorry, I'm a little fast today. So yeah, so we had a good resistance over here. See price rejection, 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 multiple price rejection over here, but this doesn't seem like a very clean breakout, right? So for you to get the best possible trade opportunities, the best trade entries, you want to get those clean breakouts like you saw on gold. So I'm going to go back to gold. So you can see on gold, we had a clean breakout from the resistance level. We had a clean breakout from this channel, right? So, but on crude oil, you can see choppy movements sideways, right? Going across the area of resistance. But that notwithstanding, I think there's a good chance we see a pullback like this, up like this. So zigzag like this, just choppy sideways market. So if you're interested in trading this, you should pay attention to the swing lows. So the swing lows are these price levels, yeah. Yeah, so those are the price levels where you want to get into your trades, because they are known as deep value levels. So I wouldn't be getting into a trade at this current price level, because there's a good chance we go lower, because you can see that's the structure we've had right from the start. So you can see the structure over here. We go up, down, up, down, up, down, up, down, up, down. So it's been choppy. So this is what price action is all about, studying past price action to make future price prediction. So because it has happened like this, or because the structure is being positioned like this, there's a good chance we continue to move like this, probably until we see an explosive movement to the upside. So for you to get the best possible trade entries, you want to wait for the deep value level, right? Deep value price levels, which will be these swing lows. So these are where you want to take your positions, because you don't want to go into a trade here and then having to get a draw down the way to this price level. The reason is because if you get into around these price levels, your stop loss could be below the previous low, right? Or if you get in around this price level, your stop loss could be below the previous low. So this is how to trade, or how to take trades in this kind of market. That's where you treat different pairs according to the market structure and according to the price action you can see on your charts, right? So if you jump into a trade right now, so I'm going to get rid of this, for example. So let's say, for example, give me a minute, I'm going to shift this. So for example, you jump into a trade over here now, your stop loss is likely going to be below these lows, because this is the previous lows that led to this move to the upside, and this will give you too much of a wide stop loss. So if you are patient enough to see price decline a little, then look for opportunity to go long, then your entry will be closer to your area of stop loss, which would give you a tighter stop loss compared to your risk aiming for this resistance level. So this is completely how I'm going to trade crude oil. I don't really see a valid setup right now for a long position, but since we've had this structure like this, we've breached this resistance level, so I think there's a good chance we see price dump, right? We see price dump, pump, dump, just pump and dump, choppy, 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 till we probably get to this resistance level. So we may end up getting to these highs before we see a reversal. So the reason why I'm also considering a move to the downside when we hit this area of resistance like this is because this is clearly still in a downtrend, right? So going back to the daily time frame, so going back to the daily time frame, you can see that, excuse me, just gonna adjust this a little. So you can see from the all-time highs, we can see price going down, lower highs, lower lows, till we had this resistance level which saw to this massive move to the downside, right? And this has been since 2 years ago, right? So if we get into this resistance level, there's a good chance we go lower. So except we, probably take out this resistance level and consolidate a little and go higher. So by that time, we would have, taken another review of the chart to see where price is headed. So for now, follow the chart wherever it leads, pay attention to area of values and key levels, which are this resistance level, and also pay attention to the price action you have on chart, because that's what's going to determine how you get into these trades with a better risk to reward ratio. So that's it briefly for crude oil. Moving on, we're going to be talking about AUD-USD. So AUD-USD, an interesting chart. I haven't looked towards trading currency pairs in a very long time, but this looks interesting because it seems we are getting ready for a bearish breakout, and the reason is because you can see we have a clearly defined bearish trend, right? Price creating lower highs and lower lows all the way back to 2021, so that's like 3 years ago. So lower highs, lower lows, and right now, if you take a look at what we have over here, so taking out these lows, you can see we have a clear trend with good price consolidation. So the best way to get into this trade is waiting for a bearish breakout before we go into the trade. So I'm going to go down to the lower time frame. So let's check out the 4 hours time frame to see if we could spot out any possible confirmation before we get into trades like this. So give me a minute. I'm going to adjust my chart, and I'm going to do this. Okay, so yes, so if you take a look at these price levels, you can see we have a good support level over here. So now, so many traders would get into this trade immediately we take out this trend line, But why that is not a bad thing to do, you want to wait for better trade confirmations, which would be in this scenario, so in this case scenario, waiting for price to hit this price level, consolidate a little, and then get you another bearish breakout. So this will be the best possible, best possible scenario to give you a better risk to reward ratio. The reason is because we may get a breakout from this trend line and see a price bounce or a price reversal from this support level all the way to the upside, right? So you want to avoid this scenario where you go short and then price goes against you and you be like, why does the market watch me? How does the market know I'm going to go short? So to do that, you wait for confirmations. And in this case scenario, watching the price action, we can see a clearly defined support level, 1, 2, 3, 4. So 4 price rejections over here. So it will be logical to wait for a price breaking through this area of value. So this is an AOV, right? So when we get a price breaking through this area of value, then that will be your scenario to go long. And this will also give you a better risk to reward ratio, because if you go long below this area of value, your stop loss is going to be above the consolidation that leads to the breakouts, while your first take profit target is going to be all the way at this lows. So this would be a good trade opportunity if this plays out as expected, right? So another reason why you don't want to jump into a trade immediately we, go through this trend line is because your potential stop loss would have to be around these highs, right? That's because this is the next place where we have series of traders going for a short before we saw price come to this price level, because it won't be logical for you to place your stop loss here, because this is the next significant lower highs before the breakout. So that's why it's logical to wait for a consolidation, which will probably be like this. Okay, so like this before the breakout. So if this happens, then you have a good opportunity to go short after the breakout, because at least you are trading below a significant area of value, and your stop loss could be around these highs, because this would be above the consolidation or the highs, the lower highs that leads to the breakout, and your first take profit will be around this price level. So this is how I'm going to trade AUD-USD for anyone who's going to trade this. Meanwhile, employ good risk management, because nothing is guaranteed. There's a good chance we even do everything perfectly well, go down and then shoot upwards. It's market, right? So that's why you go in with good risk management, minimum risk, get into your trade and get out. So don't be greedy, right? Because you have no idea what the market has in store for you when you get into those trades. So moving on, we're going to be talking about USD-JPY. So something we'll be following for quite some time as well. Bullish trend, massive bullish trend all the way dating back to 2021, right? And you can see this giant consolidation over here. So I think it's time for us to probably break through this resistance level, because we had 1 rejection, 2, 3 rejection, but this 3rd rejection didn't take us too far below, too far away from the resistance level, right? And you can see the price steadily building up to the resistance level, with price creating higher lows. So you can see we have a low, higher low, higher low, higher low, and higher low. So this shows that the bulls are gaining momentum and building up pressure towards the resistance level. So I think by the time we get a breakout, this is going to be an explosive movement to the upside. So this is a no-brainer. I don't think I need to explain much. All you have to do is wait for a good breakout, or probably wait for another consolidation, another pullback, and then wait for that breakout. So when you get a breakout, you jump into your trades, because this consolidation around the resistance level already proves to be enough confirmation for you to go long when we get that breakout. So you get the breakout, you go in there, stop loss will be below the consolidation, at least to the breakout. And since it's clear skies, you could trail your position as we go higher, or set targets to take profits as the price moves higher, right? So I don't think there's anything much to talk about USD-JPY, because it's self-explanatory. So I'm going to go to the lower time frame. So let's see the 4 hours time frame, because obviously you wouldn't be getting into this trade on the daily time frame, right? So on the 4 hours time frame, you can clearly see this is exactly what we can see on the daily time frame as well. Clean resistance level, rejection, 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 current price levels. So you probably want to wait for price to cool off a bit, because on the 4 hours time frame, you can see we just reversed from the over bot level, right? So there's a good chance we get the reversal to the downside like this, then probably go up and then get our breakout. So you want to try as much as possible to get the best possible trade entries. And I wouldn't suggest you jump into a trade right now, because if you should jump into a trade right now over here, your stop loss would have to be below these lows, because these are the lows leading to the current price movement, right? So that's the reason why we talk about waiting for a consolidation, which would be something like this. You get, then wait for that breakout. So when you get into the trade, so when you get to the trade on the breakout, your stop loss could easily be underneath the consolidation. So this gives you a tighter risk to reward ratio, a better risk to reward ratio, or a tighter stop loss, however you want to call it. So you get into the trade on the breakout, you just hold your trades and ride it all along as we go higher, right? So this I'm going to trade USD-JPY. It's a no-brainer. And mind you, when you get deep into the bullish move, let's say 200 pips, 150 pips, make sure to adjust your stop loss above your entry. So this will safely secure your trades. So in case we have nasty reversals, it's not going to affect you in any way. So that's it for USD-JPY. Lastly, we're going to be talking about Bitcoin. I love Bitcoin, man. So Bitcoin, as we've discussed earlier on, we've had massive explosive movement to the upside with a solid build up to the upside, right? You can see price rating higher highs, higher lows. And even when we had this consolidation over here, I told you about possibility of a bullish breakout, because we're in a bull market, right? Even when we had this over here, I told you of a possibility to go higher as well. So right now, I think we're just going to see more consolidation around the all-time highs. So if you're going to be a big bull with this, then you could take these price levels like this. So this is the daily chart, I understand, right? So just bear with me. We're going to go down to the lower time frame as well. So for those who are holding spots, so trading Bitcoin spots, so you could, or you should wait for a good consolidation. I think we're going to see a significant consolidation, at least all the way to the halving, before we get an explosive movement to the upside. So this is what I'm going to watch out for. If you're going to trade in Bitcoin spots, then you want to probably watch out for this, even if you're trading futures, right? So watch out for a good consolidation followed by a good breakout. So a massive breakout with volume. This would give you a confirmation that yes, we are ready to go higher, right? So if we get a good breakout, then that should be a good enough confirmation to go higher, to go long. So for those buying spots and also, you know, trading futures. So going on to the lower time frame, so I'm going to get rid of this. Then we're going to check out the 4 hours time frame. Mind you, I haven't actually checked out the 4 hours time frame for Bitcoin, but seems there's something interesting over here. So we have a good support level over here, right? And I think it's probably going to hold. And if you take a look at this, this is similar to what we had on gold, right? So you could do this to get a better trade entry, right? So if you do this, then this could be a good opportunity to go long, right? So 2 things could happen. We could get price consolidates and then fall off a cliff here, or you could get price consolidates and then give you that bullish breakout. So this is similar. This is going to be similar to what we had on gold. So I'm going back to the gold chart. You can see over here on gold, when we had this consolidation, right, you can see we had this massive bullish move to the upside, but gold had to take a dump. But for Bitcoin, I think if we do get a bullish breakout from this pattern, I think it's going to be all the way to the skies, to the moon, as you crypto traders would say. So that's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below. I'm going to try my best to be much more active henceforth, so just bear with me if I miss 1 more week or 2, but I'm going to try as much as possible to put out these videos as often as I can every week. So that's it from me, guys. See you next week.